to invest in assets and your business efficiently.
$100,000 here, $250,000 there. And instead of maybe hiring another marketing employee or hiring other roles in their business to grow it, they will put that money into their friend's startup, or they'll put that money into a real estate investment, or they'll put that money into maybe another business idea that they have. You're earning 10% pre-tax in that business. Your return on capital in that business is actually 50%. You can't get a 50% return on capital on most real estate investments. You can't get a 50% return on capital in the public markets. Let me take some money out, let me take some chips off the table and maybe start investing in real estate. Maybe I'll start investing in coffee shops, or maybe I'll open up a Dunkin' Donuts franchise somewhere, something like that, right?
Welcome. This is Gull, your money mindset expert. And once again, we have the amazing Zack Oliva. Welcome, Zack.
Hi, how are you?
I'm doing amazingly, Zack. Thank you so much for joining us again. We had such a fantastic conversation on Friday Features. We had to have you back today. Zack, everyone's heard once again how amazing you are, but please, in your own words, tell everybody what it is that you do.
Sure. So I am the co-founder of Oliva Gibbs, which is a law firm in the United States. We have about 60 lawyers in the firm, and we work with oil and gas companies all across the country on their operations and litigation. Additionally, I am the founder and owner of Oliva Partners Management, which is an investment fund for high net worth individuals and families.
Amazing. And today's conversation is about how to invest in assets and your business efficiently. So why is that so important, Zach? And why have you mentioned when you were deciding on the topic that it's about investing in assets, but also investing in your business? Why is that so crucial?
Sure. So I think that one of the things that I've noticed over the years, and working with entrepreneurs, and there are also entrepreneurs that are in our investment partnership, is that a lot of business owners, I think, mistreat their capital in their business. I see some business owners taking capital out of their business, $100,000 here, $250,000 there. And instead of maybe hiring another marketing employee or hiring other roles in their business to grow it, they will put that money into their friend's startup, or they'll put that money into a real estate investment, or they'll put that money into maybe another business idea that they have. When instead they could take that money and just reinvest it back in their business. I think like some entrepreneurs, definitely myself included, have a little bit of ADHD and shiny object syndrome. But I really think that over the years, when I've seen businesses that have grown significantly, it's been the businesses that, they know the numbers in their business, so they know what their return on capital is inside of their business. And if you have a business which is well capitalized, so you have a strong balance sheet, and you're earning 10% pre-tax in that business, your return on capital in that business is actually 50%. You can't get a 50% return on capital on most real estate investments. You can't get a 50% return on capital in the public markets. You can't get a 50% return on capital in your friend's startup. Probably most startups obviously don't work out, right? So I think really if business owners knew the true numbers inside of their business, and that was the decision was, okay, if I take this money out of my business and my money inside the business earns a 50% return on capital, once I take this money out, wherever I put it needs to earn at least a 51% return on capital. Otherwise, it's an inefficient decision to make.
Right. So you're basically
I think
saying
that,
that,
but
yeah, sorry,
go ahead,
I
I'm
just want
sorry.
to, I would just put summary in. So basically you're saying that a lot of the time the business owners don't realize they get a more efficient ROI by reinvesting in their own business because they know that.
Yes,
And
yes,
instead they tend to jump ship and, either invest in friends' startups
yes.
or in real estate or have this false notion they can get better returns elsewhere, not realizing that the best returns would be if they reinvest in their own business and grow that business.
Yeah,
Um,
so a good example is, I have one of my friends who runs a business recently called and said, "Hey, I think I'm going to take out about 250,000. I'm going to put it into this real estate fund that I heard is doing really well." And I said, "What are the returns like in that real estate fund?" "They're 11%." Well, his business is growing like crazy. So why would you take money out of that business? Just keep reinvesting into that business, right? Charlie Munger, who is Warren Buffett's investing partner, said, when you find a good business, back the truck up and dump all of your money into that business because it's going really well.
mm,
So I think one of the reasons that folks do it could be because they want to diversify,
mhm.
right? So, okay, my business is going well. Let me take some money out. Let me take some chips off the table and maybe start investing in real estate. Maybe I'll start investing in, I don't know, coffee shops, or maybe I'll open up a Dunkin' Donuts franchise somewhere, something like that, right?
Mm,
But again, I think that it's irrational because you can diversify within your own business. So, for example, in our law firm,
mhm.
we work with oil and gas companies, which is a very cyclical industry. There's
Mm.
booms and busts
Yes,
constantly.
of course, yeah.
That there's been since we started the firm in 2013, I've been through four downturns.
Mhm.
Every year, when we are doing our strategic planning, we ask ourselves, what is one thing that we can do in the next year, new practice area or a new business line that will take us outside of the boom and bust cycle in the oil business? How do we make this business a little bit safer next year? And I think that entrepreneurs, when they're purposeful about building their businesses and thinking about their businesses as their largest asset, you can have so much more creativity and returns inside of a business than you can uh, pulling the money out and investing in a bunch of different stuff.
Mm.
I put myself in that category. When I first started making really good money, um, I would pull money out, put it in someone's venture capital fund, or I would put it into a real estate thing or private investments. And you lose a lot of value. Obviously, number one, the return on that capital is much lower than it is in your business, as I've already mentioned. Number two, you lose control.
Yeah.
You have no control when you invest in these other things. So I think that the most prudent way for entrepreneurs and business owners to grow their own capital is get a really good accountant who is able to tell you what your return on capital is in the business. So, if you have a well-capitalized business again that earns 10% pre-tax, you're earning about a 50% return on capital. If you get to 30% pre-tax, you're earning an 80, I think 85% return on capital, which, I mean, how are you going to get that return anywhere else? It's just very unique to the business structure, right?
Mm.
And then once your business grows so large that your business is earning, say, maybe like a 12% return on capital,
Mm.
then you can start taking money out and maybe you put it in a low cost index fund and you dollar cost average into the public markets.
So,
But because then you have control because you're dollar cost averaging into just like, index funds. Um, I think that that's the right thing to do. One thing to note though is Apple, their return on capital is still over 90%, which is insane, right?
yeah.
So there's no rule that says that the size of your business dictates the return on capital.
100%. And I was thinking when you were saying this, early on in my days, I suppose when I first really came into the online space or the investing space, I made so many mistakes. So my coaching took off really, really well from about the end of 2017. And 2018, I was making decent money. And I did exactly what you said. I took the money out of my coaching. And rather than reinvesting into my coaching, I took it out and I put it into various stuff. And then hit 2020 and my coaching really took off. And I guess what? In 2021, I put a whole chunk of it into crypto.
Mm-hmm.
You know where that's going, right? So and with Luna as well, I had a huge amount of Luna, and that just completely
Mm-hmm.
wiped it out and other things. And it was a sure thing. It was a sure thing, and I'm this smart woman and da da da, whatever, right? And money was no end, and money was coming. It was just stupid thoughts. Maybe in hindsight's a great thing. But I'm thinking, I thought of all those things like you just said. Oh, I don't want to put all my eggs in one basket. What if my coaching stops tomorrow? And I need to have an alternative income stream and etc. etc. Not realizing I could have reinvested that money into different forms of coaching or whatever else about the coaching, could have just invested in it to get to, get to the, 100,000 a month to the million a month and so forth. I could have gone that way rather than taking the money out and putting it in other places and
Mm-hmm.
losing it and sometimes losing control or some. I mean, some of them I haven't lost money, but haven't made much money and so forth. So, and real estate's been another option as well. And so I was just relating to that to myself, thinking, I'm supposed to be a very smart woman, but I made the same mistakes, right? Like, so it doesn't make me
Yeah.
very smart, does
No,
it?
I mean, a lot of people do. And I think that, you look at someone like Warren Buffett, one of the richest people on the planet, he takes a salary of $100,000 a year.
Mm,
Everything is being reinvested into Berkshire Hathaway.
mm,
And it just reinvests and it reinvests and it reinvests and it reinvests. Now, I think that there's some exceptions there where like, if you like to own real estate, which I don't have that bone in my body. I just prefer money like on paper inside businesses working for me all the time.
mm.
But I do know that there are people, and I have a lot of friends like this, who they like I think the certainty of owning something tangible,
Yeah, tangible
right? A
assets. Yeah,
shopping
yeah.
center, an office center, retail stores, etc. And I get that. Some people have that bone, and I totally, I'm not judging anyone. But if you look at it on a purely rational basis,
Mm,
it is not rational to move money from a business that is earning a 50% return on capital to a business that is earning a 10% return on capital. It's not a rational
yeah,
it's not a rational thing to do. I'm not
yeah.
judging it. I'm just saying it's an irrational move to make.
Mm,
And, other people may say, "Hey, I can't grow my business anymore." And I guess I would challenge that because I have seen businesses, that are fix air conditioning units that make $300 million a year. There are cleaning companies that clean people's homes that make $300 million a year. Like you can grow if you have the right team and the right systems and the right processes, you can scale businesses, pretty large.
mm,
And then you can also create businesses that are related to your business because you've grown your business a lot. And maybe you say, okay, I've totally grown this business as large as it's ever going to get. I see opportunities in an ancillary or related field,
mm.
and there's some synergies. Okay, well, maybe you start another business and you start building up that return on capital. You can't compete with the returns of being an entrepreneur. But you have to first have the mindset that you are your best investment
Mhm.
and that you bet on yourself.
100%. When you were saying this, I was thinking out, in my head about my current company that I have, and we're looking to acquire others. And I, instead of focusing on buying 10 different businesses, the opportunities that come to me are buy this and do that and do this and do that. And I say no to everything. I'm like, no, I'm focusing on this now. And I'm
Mm-hmm.
fully invested in steel manufacturing. And I ended up
Mm-hmm.
being we're in the tube bending and fabrication sector at the moment. And the other company that I'm looking at is actually they sell tube bending company, and they sell tube bending and machines, and they sort of make tube bending machines, which makes complete sense to me. There's synergy there. But when you were saying this, I was thinking out loud that I have this idea that yes, we need to go, we're going to grow this company, but we're going to grow both sideways in terms of sister companies, and obviously organically, because we're going to grow and scale the business of the individual companies up. And it makes sense to me, because I was thinking, for me to go from here to say coffee shops or retail or some other sector, it's a complete different ballgame, and it will take out my mind. I wouldn't be able to focus on two different sectors. Whereas now, because I'm fully focused on this, along with coaching, I do just for fun because I love coaching. Not necessarily for money now, because I think if I needed to, I could invest in coaching, but I've just gone in a different direction. So coaching is there to get for fun. Whereas my main career now is in this sector, and I completely agree with you. This sector, even though UK manufacturing is awful, I don't know if you know about that. UK, UK laws are as much as possible to avoid having entrepreneurship here. It's awful. It's and yesterday on this Wednesday, our autumn budget was released again. Heavy, things on business owners and more taxes on business owners. This is ridiculous. Nevertheless, it's still, if you want to be in the sector, there's room to grow, because everybody's in the same boat. If somebody wants UK manufactured goods, they have to pay the price, and everybody's in the same boat. So we have to adjust. So it's a mindset thing. Okay, how do I deal with the mindset? And I did actually, because of the thing of, oh my God, the NI is going to go up, we're going to have to, bills are going to go up. And I literally it took me a day to flip that mindset. You're not the only one in the boat. Everybody's in the boat. So we have to increase the prices. Everybody has to increase the prices, which still means there's still opportunity out there, because I have the confidence to be able to deal with it.
I mean,
and others don't.
When you're saying that, one quote that I was thinking of was J. Paul Getty, who was like a great oil man in the United States. And his quote was, "Oil is found in the minds of men."
100%.
And I love that quote, because a lot of people I've seen business owners look at the external world and allow the external world to set their belief system about their business and about what their business can do, based on maybe, oh, well, there's this other company out there that's a competitor and they've only grown to 50 million a year. So that's probably the biggest that I can ever grow this business is 50 million a year. That person may be a terrible business owner, or they may have different beliefs that kind of keep their business that size, right? The real place where money is created is internally. It's your own belief system. It's like the 4-minute mile, right? No one ever thought that anyone would ever be able to run
until he did
faster than 4 minutes, until one guy did, and then everyone's like, oh yeah, it's like totally possible. We can totally do this. So I think that other businesses that exist and other entrepreneurs are instructive in what they've created and provide great examples of a floor. But a lot of people see them as the ceiling, when in reality, it's the floor. This is definitely possible. Right? But I think people should be open to the fact that if you work hard enough and you do things right and you catch a wave of good luck, then, which is always important, the people that you idolize maybe have provided you with a path to just the floor, and there are bigger futures that are available to you.
100%. I was thinking that in my head as well, that if you look around and you see what's happened, then that's what's minimum. You can definitely get there. But you need to set your sights higher. Otherwise, how are you achieving anything more? How are you going to be above and beyond what's already been done? You have to be able to go above and beyond what's already been done. Otherwise, you're just doing what somebody else has done. And I think this is something that I picked up from my mum as a kid growing up. I didn't know. By the way, I'm severely dyslexic. I didn't know this at the time when I was growing up, and I only found out in the first year of my law degree. But as a kid, I struggled. So I wasn't able to read a full sentence until I was about 11, 12. Okay. But my mum never let that hold me down. Like I don't know, I don't think she understood it, or she probably thought I was a slow learner or something. She didn't understand the
Uh-huh.
concept of dyslexia at all. But for her, I was the smartest kid on the planet. And I could do this, and if somebody else can do it, then I can definitely do it because I'm smarter, you know? And
Amazing.
so she always said this standard. She goes, reach for the sky, reach for the stars. And if you reach for the stars, you'll definitely hit the rooftops. Otherwise, and it was so
Sure.
in English or in Urdu, so it was a different phrase, but the meaning was the same, right? So you'll definitely hit the rooftops. So aim for the stars and you can do it. And you're so bright. And I look back and I think, not once when I was a kid growing up did I think I couldn't do it. It was like, oh, I definitely can. I couldn't read a full sentence. And I was like, oh, I can read that. Oh, I can do this. I can do that. It was a belief that was instilled in me from my mum
Mhm.
at a very young age. And it stayed with me throughout. So it doesn't matter what happens. I'm like, oh, yeah, I'm going to get that. 100 million, no problem. 500 million, no problem. Whatever. It's that if someone else has done it, I'm definitely going to do
Mhm.
it. I'm probably going to surpass it, but that is just a bare minimum. And it's interesting that you have to internalize that belief first before you even take action, because your own brain will will sabotage you and your actions if you don't accept that belief that what somebody's done is a bare minimum for you, is possible for you as a bare
Mhm.
minimum. Don't you agree?
Well, yeah, I mean, I think that one thing that I love to think about is that I've achieved 100% of what I've set out to achieve. So, what would have happened if, and I've achieved more than I thought that I would have
Mhm.
achieved, 10 years ago. So, what if I started thinking bigger?
Mm.
Because I've always achieved what I've set out to achieve. My habits have always helped me reach my goals
Mm.
over a longer term period. And so what would happen if I had bigger goals? I would probably achieve bigger things.
Mm.
And um, I used to get a lot more hung up on the how. So, okay, I'm going to set this goal. How am I going to do it? How am I going to do it? How am I going to do it? And I worked with an excellent mindset coach. And he has a phrase that's one of his sayings, one of his mantras is the how is in the what.
Mm.
So you figure out the what first, and the how will just come.
Yeah.
And one of the analogies that he uses is, okay, you have two goals. Say one goal is to make $1 million a year, as an example. Another goal is to go to the grocery store and buy some bread, right? Those are both two goals.
Hmm.
One of them is scarier because it involves money, a lot of money,
Yeah.
than the other. But at their most basic level, they're both still goals.
Yeah.
And so you don't worry when you go to the grocery store to buy bread that, oh my God, what if I don't get the bread?
Mm.
You just do one thing after the other. You put your shoes on, you get your keys, you get in your car, you drive to the grocery store. If there's too much traffic, maybe you go a different way, right? If the grocery store is full, maybe you go to a different grocery store if you can't find parking. But you're going to get bread at the grocery store. And a lot of times what I've noticed working with leaders and folks that are very creative in business is because there's money attached to a goal, they feel like they need to figure out every single step along the way, and every single step along the way is guaranteed when you can't do that. It's just treat it the same as going to get bread. Do one thing after another, after another, after another, and as long as your goal, you keep moving towards that goal, it'll happen.
100%. I mean, I think there's an element of universal help that comes along the way too, in terms of synchronicities. The right people show up at the right time when you have
Mhm.
that, when you made the decision. I mean, one of the things that I teach It's your responsibility is to know what you want and then make the decision that you're going to go for it. I think those are two different things. You have to know what you want, and a lot of people get stuck on, and hung up on that. Once
Sure.
you do know what you want, then you have to make this firm decision. This is going to happen no matter what. And
Yeah.
the time frame, you can have an estimate, you can have an idea about it, but you may the time may not work. The time frame may or may not work. And it may things may happen in a different way, but you have to have the decision. This is gonna happen. Like as we saying on Friday Feature, that you make the decision, I'm gonna do this, and then I'm gonna make it right. So I'll try this method, I'll try that one, I'll try
Mhm.
this. And ideas start coming to you. And the universe, I've noticed in my own life, the universe gives you really bizarre tasks at times, or really, takes you through a really different route. Like, what the hell am I doing here? What is this
Yeah.
about? And I remember when I sat there, and I can definitely say this for my where I am at the moment. Anybody who hears, even yesterday, we had a new finance person who we were speaking to, and she looked at me. She goes, "What made you come into this sector? Like, why? None of my family members are engineers. Nobody I know is in. Well, I know people in manufacturing, but they're in manufacturing beds and stuff like that. Completely nothing to compare
Mm.
to what I'm doing at the moment." And my father was a business person, who I didn't grow up with, but he was in a complete different sector and whatever else. What and myself am a lawyer. What prompted you to come into this sector? And it makes no sense. And I'm the also I don't know about US, but in UK, manufacturing, especially in steel manufacturing, is heavily male dominated. In my
Mm.
company, I'm the CEO and I'm the only female. There is no other female in
Mm.
there here at all. If there are females, they tend to be in the accounts department. So what prompted you to come here? And I have to say this, it's my intuition, it was my guidance, like I said, of my true
Mm.
inspiration, Andrew Carnegie and Ratan Tata. So, but I had to listen to it, and it was illogical. It makes no logical sense for me to come into this sector at all whatsoever. But I felt the urge, and this is in 2023 when I felt, no, I'm going to go for it. Went, looked for a company, bought it, and I've come in, and now, but once you're in, I'm it's like duck to water. I'm in my right place. I really feel I'm in the right place, doing what I need to be doing. So
Mm.
you have to listen to your intuition, know where you are. Yes,
Sure.
I'm not in my comfort zone. I'm out of my comfort zone. I'm learning. I'm dealing with things, and also dealing with a lot of men, with a lot of testosterone, being a female leader, female boss, but
Sure.
without being a female boss. I tend to be a team player. So I'm a team player because they have the knowledge. They're the engineers. I'm not. So I have to
Sure.
interact with them and learn from them and make sure that they know what I need them to do, but at the same time ask them, what do we need to do exactly? So it's a different type of leadership, is learning of it as well. But again, if you trust the universe, if you trust your intuition and you take the decisions, and God knows the things that were thrown at me because it was a different sector I wasn't aware of. So the sellers played a game with me, and I had a lot of rubbish thrown at me. But touch wood, we turned around. The company's thriving now. We're doing really, really well. The team's absolutely excellent. I have amazing people working with me.
It's amazing.
But I had to learn. And we
Hmm.
literally were in January close to bankruptcy. We literally were a few months in, like, oh my God, we're going to go to bankrupt. What the hell have I
Hmm.
done? Right? We turned it around, and no, we have a lot. October was our best month to date, and we're really, really pleased.
That's
Done really,
awesome.
really well. But the point I'm making is you have to trust your intuition. So
Hmm.
if you make a big bold goal, and by the way, my goal, which was originally a certain number, I'm not going to say what number, that came first. The how came after, in terms of, okay, I need to go
Hmm.
into this sector. Why? But okay, at the time I didn't know, but the goal came first, and I didn't know how I was going to get to this financial goal. And it wasn't through coaching. I knew this for a fact that that was not going to be through coaching. Coaching I loved, but it was going to be on the side. So what area I'm going to go into, I have no idea. The goal came first, and then steps were made out for me, and I was
Hmm.
guided towards this. This is the reason I'm sharing this is you need to make that goal first and make a decision you're going to get there first. The how unfolds in the most bizarre, sometimes unpredictable, and sometimes a different route that you have to take.
Hmm.
And sometimes it feels like you're taking a step back because you do have to take a step back, pull away. Because
Yeah, sometimes. And I love that you brought up intuition. There's a great book that I read recently called The Extended Mind, and it's all about intuition, but it's backed by empirical evidence about
mm,
using intuition in decision making and in especially in the business context. It's an excellent book.
oh, brilliant. Oh, I haven't read that book. So who's that by?
I don't know.
It's okay. I'll look for it on
It
the
was the first time I ever read that author. Yeah.
the Extended Mind. Yeah.
Yeah.
Yeah, I'll look for it on Amazon. I love books like that, so I'll go
Hmm.
carry on reading. But I think the point is you have to make the decision, as we're both saying, and then you have to follow through with action. And
Yeah.
sometimes the action is illogical. It's based on if it's especially if it's based on intuition. But you have to
Hmm.
have the confidence and the gumption to stick to the decision. I'm gonna achieve that goal. But coming back to this
Yeah.
idea of investing in your business, so it's great to invest in other assets. Your recommendation is to invest in other assets, maybe ETFs, low cost ETFs, and
I
so
mean,
forth.
I think that, I am a big believer. I think maybe it's these days I see that there are more folks that are investing in, at least in the United States, in real estate and cryptocurrencies. I'm a big believer in the United States stock market because you're basically investing in the future of America.
Mm,
And I'm a big believer in America as a country, as an economic powerhouse. Certainly I would put I've invested in the United Kingdom as well,
mm,
and some other countries in Western Europe. I that's where I prefer to invest. I do manage an investment fund where I buy undervalued companies, and the goal is to beat the index funds with that, which some years we've done very successfully, and other years we've underperformed. But overall, I think we're ahead. Um, so that's where I decide to put my money and investors' money in stocks, in operating businesses. Now, if you think of investing in the stock market as gambling and you're chasing the next big thing, then that is um, going to end a certain way probably. But if you look at buying stocks as an ownership, a way to own a business, I think that you can't compete with it. You can own some of the greatest companies in the world and be an owner in those businesses. And if something goes wrong, you can make a decision when you're sitting in your underwear to leave the business. So,
mm.
like, I don't know if you've ever left a private business before. It's a lot of paperwork. It's a big process. Um, and it can oftentimes be very emotional if you have business partners, for example, or key people that you really like. So I don't think you can really compete with, in my opinion, you can compete with investing in stocks.
I mean, I believe in. I mean, I think individual stocks. I think is a bit for more risk. After years of learning about investing and so forth, I've come to the conclusion if you are not going to do this full time, then ETFs are the best way forward, where you just invest in a bunch of in a bunch of
Mm,
bunch of
sure. Yeah.
companies, and you can
Yeah.
always go in different sectors. So my favorite sector is technology. I think that's those
Uh-huh.
ETFs perform really, really well, but then you have to embrace the roller coaster ride because they are more volatile
Hmm.
compared to
Sure.
the UK. Sorry, the I think the other ones I personally invest in would be the US S&P 500 and
Uh-huh.
the global stocks. Those are the three that I really aim for, and being the global one being the most stable and the obviously technology one being the most volatile. But
Mhm.
it's your risk appetite and what you're entitled to. But then that means I do cost and dot what's it called, dollar cost averaging or something on those lines.
Dollar
I
cost
yeah.
averaging. Yeah.
So it's basically investing regularly, regardless of what the price is, just doing it on a monthly basis, so that you know that you're going to get the best returns,
Yeah, I mean
average out.
that's the recommended procedure by Benjamin Graham, who is kind of the godfather of value investing,
Mm,
and he was a professor at Columbia University and Warren Buffett's mentor. He
mm,
wrote a great book called The Intelligent Investor. And there's the book is divided up by, okay, are you going to be a defensive investor, which basically means you're not going to do this full time?
mm,
Or are you going to be more of a enterprising investor, which means that you'll do this full time? So I've chosen the path of being an active investor, where I pick individual stocks. I've been doing it for a long time and I love it. But I also do a lot of research. Sometimes I get things wrong and there is a certain risk attached to it, I think that if you buy stocks with a very big margin of safety, then there's a lot less risk. So I spend a lot of time doing due diligence on the individual stocks, um, and make sure that I'm buying them also, they're good companies, but also at the right price.
Amazing, amazing. So on that note, we're going to wrap up. So can you give us a summary of how to, so to answer the question, how to invest in assets and your business efficiently?
Yeah, so I think if you look at your business as your greatest asset, find out from your accountant what your return on capital is, and you can use that to make your next investing decision.
That's wonderful. So tell us, Zach, how can we find you? Where can we find you on the internet?
Sure, you can find me on the internet at really just LinkedIn, and from LinkedIn you can check out my companies, the oil and gas company and the investment fund, and I have a weekly investing newsletter that goes out every Monday morning that you can sign up for. And you can just find me at Zack Oliva on LinkedIn. Or you can visit olivapartners.com for the investment commentary.
Wonderful. So if you're listening to us on the podcast, the link for Zach will be in the show notes. And if you're watching us on YouTube, then down below in the description section, we'll have the link for Zach to go check him out and see how he can help you. Thank you so much, Zach, for joining us today. It's been a fabulous conversation. I've learned a lot, and I think it's brought a lot of things to my attention in terms of how I can improve my business and how I can reinvest there rather than take money out, which I think
Mhm.
it's something where I was thinking of, but I think it's reinforced the idea even more so. So thank you so much for that. And I
Sure.
hope to speak to you soon. So thank you so much.
Yeah, absolutely. Thank you, Gull. I appreciate it.
And thank you for listening to me and Zach today on Wednesday's Money Talkies. I will be back with another amazing guest, finding out how you and I can build a better business. Until the next time you meet, this is Gull signing off. Take care and bye for now.